Hello, let's look at Hind Copper today. Please note this is for educational purposes only, for analysis, looking at some interesting moves and trying to build a knowledge base. This is not for investment purposes. So Hind Copper, that's an interesting stock. It hasn't seen a lot of new highs since April, whereas the market's seen a lot of new highs precisely since April, right? Since the end of April. So end of April, you can see it tapers off, whereas the market's actually starting making new highs. So it's kind of running contrary to the wider markets. Sometimes it's good to have these kind of stocks in your portfolio too, because of a mix. I'm not saying Hind Copper specifically, but something that's contrary to the market as well, like a hedge. Plus, what it does is it offers you uh, slower returns, lower risk, lower returns, hence maintaining like a balance to the entire swing. Given how fast the Nifty is rising, it's also a good practice. But let's look at Hind Copper specifically and how it's doing. Amazing rally here, very little pause in 2024 as well for a couple of months, and then it's back up. 2020 as well, you do not see a major dip. That was its bottom, and it just kept moving on. This was a non-eventful period, 2021 to 2023. So that's how the past looks. Let's just quickly look at the monthly candles too to see what's happening there. Now, these levels I've drawn out are based on prices that have the price movement that has happened here. And you can see, amazingly enough, you can go back into 2012 and 2011. You can see how, so you can see a double confirmation of what's happening here based on what we've drawn from here by looking at the past. So that's a really good practice to always ensure that price performance sees similar patterns, and that's where the stronger and the strongest levels you'll see. So with that obvious statement, right, what you can observe here is that these are the strongest levels of support for Hind Copper here. So people are talking about it being bearish already, right? So you can see these levels here, and in the past in 2012 and 11, they were exactly the same areas that we saw a massive break from. So obviously, breaking from those levels, significant bear market. Similarly, well, let's go back to the daily chart. Let's look at this. There are a couple of reasons why there are so many levels around this area. The level from 277 to 263 is a band. You could simply go for 263 because that's the lower level of that band, and 277 is higher. So, but that is a band in which Hind Copper tends to form a very tight base. Currently, if it dips below that, I would see further weakness. 336 is where Hind Copper has actually signaled a proper turn down. So so the signal itself came here on this candle, and here these two candles indicated the first sign of Hind Copper going down. And of course, you see the breach of this has had a significant impact with this large candle. But a big larger confirmation is this particular one, 336, which again breaks very, very strongly. And it's not a good sign for Hind Copper. The next few levels are going to be 277 and 263. Weakening those would send it down straight to 238. Now, 238 is a level that Hind Copper might test and bounce back from, but bounce back and stay below 336 or even below 277 and might not survive that. Given how weak it is at that stage, we will be able to see it more effectively, more clearly. So these are the levels to watch. Look at 238 being like a bounce back area, and then these levels being tested again. If it breaches through all of these very, very strongly, 38 especially, this is not a stock that's going to survive that fall. It might go into a prolonged bear market, given how its charts are forming. Currently, I don't see that happening so quickly. First of all, you've got a base here for a couple of months, and the same base dating back a decade. It makes a big difference to have bases rebuilt again and again. That means that the bounce back might be strong, and it might even help sustain the stock just above that. But we'll have to see how stock performs when it reaches those levels. If it sees tremendous amount of weakness, yes, it's definitely a stock to get out of in the long term. For now, I would, if I'm holding this stock, I would book profit, and I would watch for 238 as a uh, possible area to buy again. The top's indicated, but with a lot of stocks, especially after we looked at HAL yesterday, you can see that even after being in a signal of overbought, they can still keep moving higher and higher. So HAL is one of those. Titan is one of those that did that for a very long time. These stocks require drastic corrections too after that. But given Hind Copper plus the wider markets moving up, it's possible that Hind Copper might just sustain this too. So that is all those angles that you need to look at with Hind Copper. I hope you like that. Thank you for watching.